Hello, this is the Demographics Decoded Podcast with me, demographer Simon Küstenmacher.
And me, Michael Yardney, property and wealth creation expert. And this is the podcast where we unveil the trends shaping our future. And today, I'd like to start by asking you a question. Have you ever stopped to think about how far Australia's come since 1966? Now, why do I choose that? Because I remember that year well, because it was the year we ditched pounds, shillings and pence, and at school we used to sing a jingle and there were jingles on television. That's when things started, when we swapped pounds, shillings and pence for dollars and cents. Back then we were a country of 11 million people, mostly Anglo-Celtic in heritage, and we had an economy built on factories, farming, and we were, I guess, in many ways following Britain's lead. But today I want to fast forward 60 years, and Simon, I got the inspiration from that from an article that you'd recently written in the New Daily about looking back to give us a view of what's going forward. And interestingly, your focus was on unemployment more than other economic factors.
Yeah, this is just a fun column where I wanted to see how long we have super detailed unemployment data for. And so the real reliable data starts in 1966. And so we take it from there, which of course the post-war period. I figured, let's walk through the unemployment rate from 1966 until today, and we'll see what kind of highs and lows we've experienced and what this might actually tell us about the history of Australia.
I think this will be interesting for people who are in business to understand what are going to be the factors influencing businesses and consumers moving forward, and also for property investors regarding what demographic changes are going to occur. So, Simon, bought my first investment property in the early 1970s, so not in 66 when I was still in high school, but at that stage we were a manufacturing country, and a lot of people were living close to the CBD where the factories were, but over time the new freeways came out, the new estates came out, and over time where people lived and how they lived changed, but also how we worked changed. In more diverse service-based economies, we've become very urbanised, but interestingly, we've also become one of the wealthiest countries in the world over those 60 years, despite all the economic challenges, and we're not belittling the cost of living challenges some people are having, but boy, we are the lucky country.
Yes, we are, and we'll probably do a couple more.
Are we? Or are we just in the right place at the right time?
Well, we've been in the right place and the right time for a long time now, and I would argue that even in the future, if you look at rough geopolitical developments, they will impact us much less than other countries because we are still in the good books of, believe it or not, both the Chinese and the Americans.
Really?
It doesn't seem it because both superpowers need to slap us on the wrist occasionally just to show who's boss. But they pay us money because we provide them with our four boring pillars of mining, agriculture, exports, then a bit of education, and a bit of tourism. That's all we do in this country. That serves us well because as long as there is urbanization anywhere in the world, that means that people need their steel, which is iron ore, and coal is needed for that, which is what we export. As long as rare earths in the electronics world are of importance, which is what we increasingly will double down on, that's fine. So we'll have nice things coming our way, which is why I would argue that in the future, and we will end with this, but I think I'll
give a spoiler alert, are you?
A bit of a spoiler alert. I think we'll be fine in the future because these four pillars are not at strategic risk. So I would expect more and more years of low unemployment unless something absolutely terrible happens and we completely drive the economy against the wall. But other than this, our demographic profile suggests low unemployment. It also talks more about increased hollowing out. So we have more and more rich people, more and more poor people, shrinking middle class. All of these kind of things do occur. But on the whole, the country keeps getting richer.
Well, let's go way back to the 60s. And I was surprised when I read your article. And for those watching this on YouTube or Spotify, we're going to show the chart that Simon put in the New Daily. I was actually surprised at how low unemployment was. That 60s was near full employment by the looks of things, Simon.
Exactly. So throughout the 60s, we had pretty much 2% unemployment rate. which is outrageously low. And we want to remember the main reason for this was that, of course, we still lost soldiers during the Second World War. So there were relatively fewer people of working age than we would have expected. And then, of course, in the 60s is when the first bunch of baby boomers, this tip of the iceberg of baby boomers, started to enter the world of work. And the baby boomers are this gigantic birth cohort. 3.8 kids per woman at some stage, so massive families. And so that means they all entered the workforce at the same time and they outcompeted each other for wages. So we had relatively low wages in the 60s, which was super helpful for manufacturing, because that made it very, very viable to produce your Holdens and your Fords on the assembly lines, because the labor cost wasn't all that expensive because there were so many boomers. That was cool. That worked. And so we got used to this kind of world where it was so hard to find workers. This is also when we kind of rethought what should we do with migration, because we had this immediate wave of post-war migrants, which was essentially just refugees of one way or another coming to Australia. But then as the economies, particularly in the Mediterranean, we're talking about Greece and Italy here, they didn't really get going after the Second World War. They had relatively large amounts of young people and they just emigrated. And we snatched up quite a few of them. And as they entered, we saw a bit of an increase in the unemployment rate. But back then, this was a hyper strategic migration strategy where we just said this manufacturing thing that we're doing is actually working. So we need more of them. We're also now actually growing our country again. So we need people to actually come and build homes and pour a bit of concrete here and there to create new roads and so forth. So we took relatively low-skilled people into this country, so we had super low wages. It was easy to employ those people. So even as we took in more migrants throughout the 70s, the unemployment rate didn't really go up massively. We reached like 4% or something in the early 70s, and it took a bit of an oil shock around the world that made it made energy more expensive. And that means that manufacturing, which was our most important sector, became a bit less easy to manage. So you get unemployment rates up to, on average, around 6% throughout the mid 70s to early 80s, if that makes sense.
Yeah.
And then we saw in the 80s, we saw the first kind of real shock of unemployment. And that's when you have global competition entering this thing. We're not protecting our workforce as much through tariffs and God knows what. And yeah, so you shift away and you understand that this current model doesn't really cut it anymore, because you saw high unemployment. Yeah, 10% is gigantic. And
Yes.
so you think about, well, maybe we do need to revamp, rethink, restructure our workforce a bit. You shift for the first time towards service-oriented jobs. And you then go and do the political hard work of deregulating a labor market. This deregulation, this restructuring leads to an initial type of job loss. And look at the chart.
There was also a recession, if I remember rightly, in the early 80s as well. Not as bad as the one of the
90s.
early 90s, but I guess our economy was affected by various international factors too.
Exactly. This is international factors, but it's also a chosen restructuring,
Yes.
kind of managed restructuring. And so it's quite stark to see this chart, how this unemployment rate shoots up in the early 80s and then it comes straight down again. And it probably didn't feel like this when unemployment climbs from just under 6% to, just over 10%. This is severe pain for quite a couple of quarters that this shift occurred for. And you panic as a country. You go like, will this forever go down? Will we see a great recession? What is happening here? This is not a good time to be entering the world of work, for example. So if you're born in 1960 and you enter after university phase in the job market, then that's not easy. That's something that stays with you for the future if this is your initial experience, if that makes sense.
Well, in Australia in the 80s, we had the effect of global competition, rapid technology change. I guess it's just a history repeating itself. We've got again today, 40 years, 50 years later, again, a global competition, rapid technology change, industries that were working are not as efficient anymore. History repeats itself, or rhymes at least, doesn't it?
It does, but if you think about what Australia now looks like, we now rely on manufacturing to a much, much smaller degree than we did in the 80s. And so you go, well, where are we impacted? Yes, we manufacture a bit, but we don't export it. What we do, we should be manufacturing more. We should be doing more value-added manufacturing in mining and agriculture. So food production, for example. But ultimately, we export mining and food products. So nobody's going to take this away from us. So as we are safer, our economy, while it became less complex, remember Australia ranks extremely poorly on those global economic complexity indexes. And so we are better positioned than we were in the 80s. So I would argue this is one of the reasons we will not see unemployment go back to 1980s or the 1990s levels, which I think is a story of optimism that we can share with even the most pessimistic of our listeners today.
Well, interestingly, there was a stock market crash in 87, and that shook through economic factors. It affected employment, it affected confidence. But one of the things that kept going in the background was mining, and mining got us out of a lot, mining exports got us out of a lot of economic problems over that decade.
Exactly. Just last week, we recorded the climate change environment episode, and we do need to be rather grateful in some way or form to mining because it did save the economy occasionally, regularly. And that's what it is. Just a big fat resource country, for better or worse, and that's how that impacts the economy. As mining prices go up, you employ more people in mining. The unemployment rate goes down, and we want to remember that in the East we would have seen an even a higher unemployment rate had the Generation X cohort, so people born in the 60s and 70s, because they start to enter the world of work just then. If this had been a big generation, unemployment rate would have prolonged for longer. But it's just as all those difficulties started to ease, we had the fortunate position of only introducing a small cohort into the workforce of Gen X. So that made things a bit easier. This gave us a bit of breathing space. And only then, Gen X then joined the workforce for the next, the 80s and the 90s, it was Gen X joining the workforce then. And only in the late 90s and early 2000s was it the time for millennials to enter the workforce at scale. And we then saw another big generation impacting Australia. So yeah, there is always the demographic background noise as well that shapes how many people are even around to end up unemployed.
Well, I remember the beginning of the 1990s when we had a recession, and our treasurer at the time said it's the recession we had to have. That was Paul Keating. Nobody particularly liked him for saying we had to have it, but that created massive unemployment. It lifted to around 10% from 1991 up until about 94, but it was different in different parts of Australia. And Victoria in particular suffered worse. A lot of people left. There was a lot of internal migration to other states. In fact, I remember the joke saying, last person to leave Victoria, please turn the lights off. But because we had unemployment, house prices dropped, a number of our financial institutions, building societies went belly up, State Bank went broke. So the 1990s started with high unemployment, as the chart shows, but then things eventually moved on and got better.
Exactly, because we slowly see productivity improve. This is the age when computers enter the workforce bit by bit. So there's technology helping us a bit to become more productive, and a bit of this trickled down to workers. That's helpful. And of course, but when you look at the 1990s, even the last Gen Xer is then slowly entering the world of work. So you get this last bit of the reprieve of Gen Xers. So that's all right. We got out of this, and then you slowly get a sense of optimism in the 90s when the Sydney Olympics are introduced. So there's a sense of now we're getting somewhere. There's something positive to look towards to. Then you enter the mid to late 90s. You look towards the year 2000, not just for the Olympics, but just as this, I think, psychologically important break where you go like, this is the new millennium. something is changing for the better. And of course, all the while outside of Australia, you slowly see the global economy taking up. You see more countries grow their population base, grow their economies, and mining once again takes up, demand. And we offer just that, which is, again, I would say, positive news story. And so we enter the new millennium with a sense of optimism.
Well, the new millennium brought this optimism, but also some concerns. I remember the concern about the Y2K bug. They weren't really sure what was going to happen to our computers. Would all our computers die? But there was optimism about the Olympics and just a sense of change, something new. Interestingly, we're now a quarter of the way through this new millennium, aren't we, now being in 2025? But as your chart shows, we have had, during that period of time, unemployment kept falling, didn't it?
Exactly. So essentially from the 1990 high of around 11% until, the height of the mining boom, 2008, we constantly were on a downwards plunge. So things have gotten better and better. And you want to remember that these things do something with the psychology of a nation. You remember, okay, 1990, 11% unemployment, and bit by bit it gets better. Yes, the line is zigzags a bit, but ultimately everything is getting better. We're fine. We're optimistic. We're positive. This is good stuff. This is a nice reprieve from the pressures. All the while, of course, then China kicks in massively in the early 2000s, well, mid of the noughties, and that really changes forever Australia. You get all this mining building boom, money floats in like crazy. This is a good environment to be doing business in. And then you have the GFC hit.
Wow, I remember that well. So between mid 2007 and early 2009, it was actually triggered by a downturn in the US housing market, Simon, as I'm sure you remember. But it was because of bad lending. There was lots of risky lending to borrowers who defaulted. And that created a decline in house prices, but more so it created significant losses in America for banks. Many of them relied on government support for bankruptcy, and it created a recession in many parts of the world. In fact, the deepest economic downturn since the Great Depression, and millions of people lost their jobs around the world. It impacted Australia as well. I remember when I first heard about that, I thought, oh, that's over there in America with their banking system. Our banking system is much more sound. There's recourse loans. People can't just leave the keys at the door of the bank and say, no, thanks, I don't want it anymore, which they were able to do in America. And so I thought, oh, no, we're going to be protected from it. But clearly I was naive and wrong. I've learned a lot about economics since then.
Yeah.
It highlighted the importance of a sound financial regulatory system, which we've got, Simon, which occasionally we complain about. We complain about how our banks are strict with our lending criteria, how APRA restricts the banks in how much they can lend as a multiple of your income or how much they can lend to investors. But you've got to go back and have a look what happens if you don't have a sound financial regulatory system.
Exactly. It's always well to complain about safeguards in times when everything is fine. You only need an umbrella when it rains, so to speak. But of course, you want to remember that the GFC in Australia wasn't bad per se. Yes, we had the unemployment rate tick up from 4% to 6%. This was the biggest spike that we had, but that was for a short time. And then it dropped down again to 5 point something for the next couple of years. So we even avoided a recession. So the global economy takes a big kick in the guts, but because the Chinese market happily continues to buy our iron ore, we have relatively high mining prices. That again kept the economy going for quite a while. And then we saw unemployment rates zigzag between 5 point something, just over 6%, settled at around 5% in 2019. Then, of course, 2020 comes along and we have a pandemic hit us bad. So unemployment took the single sharpest increase in a short period of time. We go up to just under 8% of unemployment. But this is when we kick regulations in. This is when we kick safeguards in. This is when we create a job keeper system. And so we avoided mass unemployment. Pretty cool.
Well,
Fortunately,
I remember the predictions because no one really knew what COVID was going to do to our health, to our economies, but there was predictions of double-digit unemployment, and we didn't get to that. So despite all the things the government did wrong, it also put some safeguards in to protect the economy, if not our health.
exactly. And it did help the economy in the short term there quite significantly. I think it also avoided more public unrest, because if you create unemployment while not allowing people to work and make them suffer, financially speaking, you would have had much more public unrest. You avoided that. And so we actually saw unemployment fall massively straight after. And we saw an outrageous recovery of unemployment rates dropping below 4% just 2 or 3 years after the initial pandemic. That is unbelievable what happened here. And of course, this is where I need to point out simple demographics, because lots and lots of commentators were a bit surprised that over the last 4 years, by now, I think it is, we have seen more and more relatively high interest rates. And so people say traditionally, when we see high interest rates, we also see an increase in unemployment. And the increase in unemployment was hardly noticeable. We shot up like 0.2% or something like this. And that is nothing. Economists were a bit confused by it. And I say, nah, it's simply demographics in nature. There aren't enough people around. Because I keep repeating this in many podcasts, one of my main predictions or interpretations of the future is that we are running out of workers. As we have the big boomer cohort retire, a smaller Gen Z cohort enter the other world at the other end, and for the coming decade, we also have millennials going on parental leave at scale, and they are the biggest generation. So that has an impact. So we're now at, in Australia, unemployment rate of pretty much 4%. That is reasonably low. This is not hardcore full employment as we would have seen in the 60s. But of course, our economy now relies on more qualified workers. So that means it's harder to place those workers. In the 60s, we could get away with quite a few relatively low-skilled workers. And that's not the case anymore. So you do need, even for basic manufacturing jobs, you need to have quite a few qualifications. And so it's gotten harder to play people, which is something that sometimes employers complain about. But ultimately, it makes sense that we regulate our workforce a bit more to ensure that the people that work in our factories actually have a bit of knowledge about this and so forth. Yeah, but so we're now at 4%. And then, of course, the big question for the future is, what does the next decade hold? And if I had to take a guess, and where we are at this point discounting major wars, because they will or could happen, and they would then definitely impact unemployment in Australia. But ultimately, I would be very, very surprised if we see an unemployment rate of 5-point-something% in Australia in the next decade. It should be hovering around the 4 to 4-point-something mark. Because yes, AI will get rid of a couple of jobs, but the demand for care jobs goes absolutely through the roof. And that alone tells me, well, fair enough, we probably need to fill more jobs than we can. So high unemployment is, in my humble opinion, out of the question for the next decade.
It depends what you call high unemployment, because at 4% now we're basically saying it's almost full employment. And today it's very different from when we started this conversation about the 1960s, when to get a job, you couldn't go on Seek or a similar online platform. You had to wait for the Saturday papers, or you saw ads on shop windows or factory fronts, and you used to knock on doors and go around and have an interview. Nothing was done online. It took a lot longer. So it's hard to imagine. I wasn't in business in those days, what it would have been like with 2% unemployment in those days, when it was so much harder even to find somebody and get somebody to come to work for you. And I remember when I first studying economics in the 70s and 80s, it was considered that 10%, 10% unemployment was structural. It's what was necessary to make the economy go round. And now we realise, no, those lessons learned then were not relevant to today. So you're right. Anyone who wants a job can get a job, maybe not the particular job they're looking for. And we've discussed in previous episodes how that's going to change. So if you don't currently subscribe to Demographics Decoded, just stop for a second, click the follow button on whichever app you're watching or listening to this on. So each week you get the pearls of wisdom that Simon shares, but there's also lots of information in previous podcasts. Each one is a lesson in its own right. So go back and have a listen or a watch of our previous podcasts as well about the generational groups, about unemployment. So that's been an interesting walk through the last 60 years. A lot has to do with our demographics, and a lot of the changes had to do with immigration, didn't they, Simon?
Yeah, exactly, because whenever we ran out of workers or ran out of cash, we threw immigration in there as a solution. It's an obvious tool for a migration nation like Australia. And what I mean by cash is we started to realize that international students can be an export. So we now essentially park somewhere between 900,000 and a million international students in our country at any given point in time. And we charge them a bucket load of money for the privilege of doing so. And that's a great revenue source. It's depending on how the year falls, it's the third or the fourth largest export that we have in the country. And that is significant.
Now, I want to just take a moment out from my session with Simon today to remind you that Simon Kirstenmacher is going to be the keynote speaker at Wealth Retreat on the Gold Coast on the 3rd to the 7th of May. Now, once a year, we get together with a small group of already successful business people, entrepreneurs and investors. And Wealth Retreat's not a property seminar. Wealth Retreat is really, the theme of Wealth Retreat is where are you going to be in 2030, in May 2030, in 5 years' time, in all areas of your life. So it's a holistic seminar. Now, we spend a lot of time talking about property and about tax and about finance, and Simon's going to talk about the future. But I suggest that you go to wealthretreat.com.au and find out about it. But please don't count yourself out. The successes we've seen from people who've come to previous Wealth Retreats has been amazing, because you go in with a whole lot of ideas and plans for the next 5 years, but you go out with a structured plan rather than just ideas. And then I always have a one-on-one implementation session with people afterwards to make sure that they implement that plan. But we've got an amazing faculty of property, tax, business, finance, development and demographic faculty, the best faculty I could put together, and it's an intensive 5 days, but everything's included, including a lot of one-on-one time with the experts. But more than that, building a community. A lot of people that are listening to this, watching this, feel that they're a bit isolated. So the aim of Wealth Retreat is to build a community which we help keep together so that you can talk to others about your successes and failures in business, in property, in money, in entrepreneurship. wealthretreat.com.au. I invite you to join us on the Gold Coast in the beginning of May. Interestingly, another change over that time has been women entering the workforce. It was partly a societal change of what people saw as the role of women, but they've definitely now taken a major place in the workforce, and rightly so. It's also had a number of ripple effects on the economy and society.
Exactly. And we didn't even mention this when women first started entering the workforce at scale in the 70s. That helped, of course. That helped households, and it did drive the unemployment rate up. So if you look at, somewhere in the mid-70s, all of a sudden unemployment goes up a bit. And that's because what we've done at this period of time is we increased the number of income earners from one person per household to 1.5, because we introduced women at scale to the workforce. And so more of those women ended up unemployed, but overwhelmingly they found work and turbocharged the spending capacity of our households. And so this then in turn just allows Australian manufacturing to bloom, because we buy more toasters and washing machines and just stuff because we have more money. And so the 70s turned into a more higher consumption decade, and that was driven by women earning money.
Now, I know you spend a lot of your days consulting to institutions, to authorities, to businesses, and I know that you've looked back at the past to get lessons for the future, and then you tailor your presentations to individual organisations or companies. And on that basis, if you're interested in getting the benefit of Simon's knowledge for your business, I'm going to leave a link in the show notes to the Demographics Group, Simon's organisation, and why not have a chat and see how Simon could help your organisation determine what's ahead for the future so you can plan properly. But if we could look ahead for a moment, Simon, knowing what we know from the last 6 decades, what do you think are going to be the biggest forces shaping Australia over the next, well, maybe 6 decades is too far to go, but over the next decade or
Yeah,
two?
over the next decade, it will be much more of the same. I do not expect at all that Australia diversifies its economy. So I very much think that in order to forecast what will happen, we need to have a bit of an idea of, will the world need more of our mining produce and more of our foodstuffs? And that's the two largest, biggest export categories. And I'd say, yeah, definitely. We do see our biggest trading partner, China, decline. Demographic decline, quite shocking. Their urbanization will not continue at any meaningful rate. So yes, they need fewer steel. That means iron ore and coal they will import less of. But who cares about China? There is the whole of Asia that continues to urbanize. India has 100 years worth of urbanization left in the tank. That
Really?
is significant. The Philippines and Indonesia, similar numbers. Their island nations is a bit more, complicated there. But ultimately, growth in the region. Mining products is also needed in terms of rare earths for electronics. We will continue to produce and consume more electronics. And so I think we'll be just fine in our business model. So we won't diversify the business model, but the stuff that we do well will
You're talking about, just to make it clear, the business model of Australia as a country rather than individual businesses within there.
That's right. That's right. So the reliance of Australia on our mining and agriculture exports, I would say, remains the same. So we are a bit, of course, hooked on those two industries. And so if those industries are doing well, we are doing well. And I would argue, since global warming, again, listen to the last episode on the topic, continues to go on, global yields are at risk. So around the world, yields will go down, so food prices will go up. Terrible news for the bottom 2 billion people of the planet, but Australia as a net food exporter stands to actually benefit from this. So I think Australia as an economy will be doing just fine, and we still are a migration nation when ever larger share of our population growth depends on migration, and if unemployment goes up too much, we will slow down migration a bit if need be. I wouldn't expect that to happen. But if need be, we can react. So we shouldn't really see high unemployment in this country in the coming decade.
We're very lucky. We're living in the best country in the world, and as we often say, at the best time in history. I mean, interestingly, that was an episode we did a little while ago as well. When was the best time to live and maybe the worst time? So if you haven't had a chance to listen to that, wherever you're listening or watching this podcast, go back and listen to that episode of Demographics Decoded. Now, Simon, I know you recently wrote an article in The Australian that Australia needs a demographic strategy. Of course, you've got a vested interest in saying that, but your article made sense. So I'd like to unpack that when we catch up again next week.
It's a topic very close to my heart, and especially in times of, big picture rethinking of what should we actually do as a country. I hope that I can make a small contribution towards people thinking in, a long-term strategic way about the future of Australia.
Fantastic. I look forward to catching up with you next week, Simon. Thank you for your time.
Week.
This Demographics Decoded podcast has been brought to you by Metropole Property Strategists. We provide a complete range of services to help our clients safely create intergenerational wealth through strategic property and wealth advice. If you're looking to buy an investment property or your next home, why not have a discovery chat with one of our wealth strategists? Just go to metropole.com.au and explore your options. You'll find we're much more than just another buyer's agent. We provide a complete range of services, including property advisory, wealth advisory, home buying, buyer's agency, property management, renovations, and development management services. The team at Metropole will help you with frameworks that I've fine-tuned over 5 decades, and we've been helping clients with for well over 25 years. We're big enough to tip the scales in your favour, but still small enough to care. In between these Demographics Decoded shows, you can follow me on social media, and I suggest you also follow Simon Kirstenmacher. You'll find him regularly posting on all social media platforms. And thanks for spending the last little while with Simon and me. I hope you got some benefit from the show. And if you did, and you know somebody who may also benefit, please tell them about Demographics Decoded. There's a share button on every podcast app. I hope you're going to be doing them a favour, and you're definitely going to be doing us a favour, helping us in our quest to make as many people as possible aware of the demographic changes that are going to be shaping their future. And of course, if you don't currently subscribe, we'd love you to. And of course, any of the information that we've been sharing with you is general information because we don't know your specific circumstances.